Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. I'm a member of the board, and once a week we meet here to have Cycles TV. Cycles TV is here to analyze cycles on global financial markets. We're doing this for the purpose of education, so the first disclaimer is important. This purpose of the session is cycle analysis, cycle research for educational purposes. So please don't take these commendations for any personal decision. Otherwise, please consult your financial advisor. As always, it's important to be aware of these topics. So today I want to review gold and cycles. We left last week a little bit, not early, but after 1 hour, it was requested to also review gold and silver cycles. So that's the purpose. What we're doing today for the next 15-20 minutes, let's have a look at the commodity cycles, especially gold and silver. That's it. So we are live today. If you like to ask me some questions, the chat section is the place to be. I will monitor that at least at the end of the session. So feel free to drop in your comments and questions. That's it for the starter. I will right now dive into gold. So let's start with gold first. And before we are getting to the current date, I want to start with the situation early February this year, before the aggressive Russian war started. Let's get back to this point in time and let's start there to see what the cycles have shown us beginning mid of February, to get a starting point. That's anyhow, if you're new to cycle analysis, that's always what I recommend to do before you start with the current situation. Go back into the past, update the past behavior, the daily cycles, and then that's the starting point. Then you can get up to today's activities. So onto the chart. Let's start with, this is the gold cycle. So let's start with the chart first. This is the gold futures contracts, as can be seen here in the upper right corner. Data is grabbed from Yahoo Finance. I have gone back into mid-February. So you can see here we have the 14th of February. Gold is in this very long sideways trend for a very long time. At this point in time, it was already before the aggression war started. So that's our starting point here. We always start with the first look at our cycle scanner. The cycle scanner gives us an idea about what the key cycles are in this data set. So therefore we scroll down to the spectrum plot and we see here, at least we're looking for the peaks. I think you're quite familiar with this procedure. We're looking for the most important peaks in the spectrum, which is here the first one, which has a length of 177 trading days. A second peak here with a length of 232 trading days, and a third interesting cycle with a length of 362 days, more or less yearly trading cycle. All three have clear peaks, very good cycle strength in regards to their triangles. Green color, we have good battle scores. I would skip the section here with a lot of smaller cycles here. In regards to the amplitude is quite lower. They are often red, which means we have bad statistical significance here. And we have lots of cycles, so it's not clear where a separated peak is. So these three peaks are the ones you could select from digital signal processing. These three also show up in our list of cycles. So the first one is already listed here at the top, so 177 trading days. And you can then switch between all three cycles, sum up into a composite, or select all each individual cycle out of these three. So I will start now with all of the three. 362 was the longest one, and then we had this 232, which is here. The strength and Bartels is a little bit lower, but all three are standing out in the spectrum. So what we always do, we cross-check the significance in regards to the timing points. It's always important that we read this composite cycle here in regards to their timing points, not in regards to their amplitude, absolute amplitude movements. It's just a timing instrument. So let's just cross-check if we have significant changes in trend in the main data set. So here a major low, here in the market, here a major top, which is here, and here a top, which is aligned to this one. I will just mark the important correlations here. Sorry. So here it's not clear where if there is a low, but at least here in the market. So then the next important low is here. So we have a top here and here. And we have a significant low here and here. And now, so that's how we take this composite forecast in account. So we don't know where the low is here, but at least from latest from this point, then we have significant peak up. So this is the price move here, and this indicates then a move up into this point in time here. So that's the 3-cycle daily composite on gold we could do in beginning of February, just as a starting point, which if we zoom in now, would have indicated us that by end of February, or we are in a current, maybe in a topping position here, so that by mid of February, it looks like that these cycles are close to making a top in the gold commodity markets. You can then deselect a little bit the cycles. That's what I would propose to do. So if you select and deselect, you can see how the timing now changes, or how stable your projection is in regards to the timing. So that's what I'm doing. So I start with all three, and now I deselect the first one. You see that this slightly, it's not a full change in the overall projection. It's just slightly shifting the top a little bit to the right into the future from this point in time. So even if you don't use the 177 days, the top could be into February to March. If you would deselect the longer term cycle, then it's also March. And if you deselect the middle cycle, it's more to the left. So you see there's no overall change in projection. So all three cycles, even if you use them separately, standalone, or if you add them up into the 3-cycle composite here, they all signal that the top should form somewhere here into this period. So let's say from here to here. That's what we're looking for, by the way. If you're doing the cycle analysis, that's what we are interested in. And this shows then a downswing into summer. At least that was the situation in February, just to get a starting point, or also to show, even though that during these times, it's often argued that gold and silver rallied by end of February due to the Russian aggression war, which started. So now let's see what the real data did. So I've now updated just the data set, not the cycle analysis. So you see here that nicely the peak came in, and it was, now I have all three cycles in. You see how more or less exactly this top, and then you see how this composite cycle pulled down gold as projected. And now you can even see that it would not really matter which cycle you would have selected. All three cycles or combinations out of these three cycles would have really guided you already in February. So I just want to start here to show you the beauty of cycles, and that the standard procedure by selecting the key cycles here from the spectrum below, the 3 cycles. That's the standard procedure I always repeat week by week, day by day on my own for years now. So there's no cherry picking here. That's just the problem. Photoshop, I see you in the chat. Yes, exactly. You asked the question, so that's why I'm here, and I try to stick to my words. Sometimes I forget topics, but yes, we will review. Gold, you asked for it. And that's my thank you for being live here with me. So that's the benefit of being live here. It makes it more interesting for me also. Yeah, but we want to get to the current point in time now. So that's gold. You see how nicely it worked in the past. Let's update, or let's do the same with silver before we move up to the current point in time. So I've already loaded silver here. So that's how silver looked. I think I picked similar time here. Yeah, 14th of February. So same timing here. Mid-February. We had the sideways move for month also in silver at this point in time. We moved to the spectrum analysis. So now the interesting point here is that we have different cycles which show up in the spectrum. So it's also a daily data set. Let's now collect which cycles show up in the spectrum in silver. It's the cycle with a length of 103 trading days, 156 trading days, and the third one had the length of 220 trading days. To be honest, completely different than in gold. So, but however, I think you got it. It's the standard procedure as always. These are the 3 peaks which stand out in the spectrum. That's the reason why I pick them for a composite. So it's quite easy, and that's also a main reason why I really like the visual spectrum. There are always features which you can't see as easy in the list of the table here. So for sure the cycles are also listed here in the table, so we will now pick them. 103 is the shortest cycle here. For example, just by eye spotting, you see how nicely this cycle here picked the short-term behavior in silver, and ignore the amplitude of the moves, but the change in trends from their relative change at these points in time is very interesting. Just observing, so it's not scripted. I'm just observing it here together with you. The second one has the length of 220. Directly below here, you see it's more, yeah, it's doubling the length. So it seems like it's an harmonic of 2. So multiply 103 by 2, and you are quite at a length of 220. So we have here harmonically related cycles, these two. We see how nicely these are, more moves in sync with main price behavior. And the third one is the 156. So, I mean, you know how the standard procedure works. I will do it. What's that? Whatever. What happened? Sorry, I crushed the chart. I need to go back to February. February 14th. I mean, I think it doesn't matter if we pick it exactly. That's 17th. Let's, yeah, that's okay. Let's move this out. We need to load a little bit more data as we have shortened now, going back into the past. Here's the data, so I will add a little bit more data to the past here. So it's a little bit too much, but that we have around these 1,900 bars. That's always what I try to achieve. You know the reason for that. Let's closely check. So here it's quite different, but here we have the same two are still there, 222, 156. So these are the same cycles we have just seen a second ago. So you see it does not really matter if it if you change a little bit the start or the end point. So I just quickly choose similar start or end points, but not exactly the same, just to try to stay in this overall range here around 1,900 to 1,000 bars. That's the sweet spot to detect the cycles, at least if you're interested in do future projections. And then, as always, just very quickly, just repeat it that you get how to do this, just connecting here the timing points based on what is projecting here. So it's also in current upswing here, and we can zoom in into this period here. So this is suggesting from silver, so this is just analyzing silver. So silver is suggesting also now we could move up into the period of March, April, maybe May here. So silver and gold are both projecting in February an upswing. Gold has projected the top end of February. Silver a little bit continuing into the period of May, but both have topped already. So let's see the silver forecast here, peaked a little bit here more to the left and has peaked early. So the longer term cycle, I think, won't help us here. Yeah, but it's longer term cycle, but at least both showed us the peaking form here. So now let's update to the current point in time and do a forecast for both data sets. So as we have an feeling for what's happening in these markets here. So I will now, let's clear everything. Let's update to the current point in time. So we have Monday, June 6th here. I'm just verifying the latest data point. It looks like the peak was in here as the cycles from February also shown us. So we have confirmation of the composite cycles we have seen from February. So now we quickly do the same procedure here. We move into our spectrum analysis. We now still see a cycle with a length of 224 days. Maybe you remember we had this cycle length in silver, and in gold, the previous cycle length was a 230 something. So this looks quite like a valid cycle length or nominal cycle of 220 something. And it's allowed to morph based on the principle of variation. So if it's 210, 230, 220, this will vary. So the market rhymes. The market is not even to a theoretical model of cycles. So therefore, 224 sounds very familiar, as we have seen in the past. And then a longer term cycle seems to show up here in the spectrum with a length of 382 days. I would be careful with the other ones here. We have also 273, but let's start with this one here, which is clearly standing out, and we have the situation here from the past. So that's the longer term daily cycle. If we look on the gold model here, so we have more or less past half of the cycle length from this gold cycle, and we have still room to go into late summer or August. So what's labeled here is, as we see somewhere, end September, August. So the month of August is the months where this cycle is bottoming. We could now add the longer term cycle of 382, and you see it's not changing this overall bottom projection in total. Just have a look. If I switch the longer term cycle on, it extends the bottoming period into September, from August into September, but there's no. And that's quite a good confirmation if you see this happening. So if we pick these two cycles, and it's quite a longer term cycle, these 382 days, same projection, no big change here. And for this model, I would stick with these 2 cycles here, as the other spectrum peaks are not as clean as we need them to have to pick them for a forecasting model. So that's the best guess. And you see from past behavior, I will not repeat the procedure here. From the timing point perspective, it picked nicely past changes in trends here. So that's the outlook in gold. If you have a quick look at the energy plot here, that's just an additional view. So it's nothing for, I would not recommend this for a beginner. It's based on the analyst package here, but it shows the kind of cyclic energy which is coming into the markets. It has been the most negative already, but it still has a lot of negative energy until July. Then it flattens out. So the period of beginning of August, and that's the point where the markets could turn, or where this model does not give you a reliable timing point up to the day. So it just shows you until, that's where I'm hovering here with the mouse, until I would say mid to end July. We have this huge drop from the cyclic model here, which is negative. And then we have this flat period here, which indicates that we don't get a clear day projection when markets turn, but that's quite normal. But that's just important if you then zoom in or add some technical analysis. But that's it for gold. So let's now add silver to the mix to see if cycles confirm. And Epis, yes, I will also have a look at the weekly cycles in a second, so that we can see if this is in alignment with the weekly cycles projection. So let's switch to silver daily first. Let's update the data to today. We have, at least here's an example, as I've loaded a lot of data onto the chart. And that's where you need to be careful with. You can see this here. We have over 3,000 bars, or a period from 2008 to 2022. So to today, we have 14 years of data, which, from my experience, is too much data if you're interested in a valid projection moving forward. You're doing more or less an average cycle analysis of past data. If we would be just looking at the history, would be interesting, but as we're always looking or interested in what might happen in the future, we should not take too much historical data into our context analysis. You see also on the spectrum, more and more peaks show up. The more data you add to your analysis, more and more peaks show up. So it gets even harder to decide which ones to peak. I mean, just for interest, I would just pick one from this analysis. So the cycle with a length of 358 days. I think we had this longer one also in gold, right? 380 something. This could be picked, but let's first shorten the time frame. Let's set the starting point here. So now we have 1,000, which is still a lot. Oh, we can go here. So now we have this 1,000 bars average or sweet spot of data for the analysis. Let's get back into the spectrum here. Now it gets interesting that we have the cycle with a length of 220. You remember we had the same dominant cycle which showed up in gold. I can't remember the current length, but if this is recorded, you can just reverse back and check it. So that's why I also started in early February with the first analysis, where we also had the cycle with 200 something, 220, 230 showed up. So that's now giving more and more confirmation about this cycle length. So let's clearly select this cycle here, 220. Yeah, and you see from this point where we are today, it's confirming, or it's just giving you the same picture as we get from the gold daily, which is not surprising, by the way, but at least we don't have conflicting cycles. That's what I'm looking for. So if we had conflicting cycles in gold and silver, as these are quite correlated assets, we should not use any projection out of that. If they give you the same answer, you could take this more and more into account. So that's the daily perspective. Now, to complete the picture, that's just the very simple daily picture. To complete the picture, we need to see where we are in the longer term cycles. Therefore, I always use the longer term. So let's check the weekly cycles now. So therefore, let's switch to, let's clear it first, gold weekly. So this is, current gold data set, weekly data set. We have this 800 to 900 bars in our analysis. And let's check the spectrum where we are. So it's 240 something, but we cannot compare this to the 220 because this is now weekly. So it's a complete different cycle. 242 weeks is showing up here in the spectrum. Let's start with this one here. I mean, the topping process is a topping process here, which happened in this area here, which is okay. But if this is the topping procedure, until here, we should see a drop into next year, which need to unfold at least to keep this cycle model as valid. So the weekly cycle from gold, at least the main dominant cycle, it's not a composite model, but the basic cycle model suggests that the top has formed in gold already last year, to be honest, and finally peaked. So we have, what's interesting here, just if I just inspect this cycle here, let's talk a little bit about some observations here. What you can very often observe, and I count this as a confirmation, is it doesn't matter if it's a bottom or a top. You see one peak a little bit from the left theoretical projection and one peak to the right of the theoretical projection. So that's what you often see also for bottoms. So this shows that there are also shorter term cycles with overlay this dominant cycle, which I don't know the cycle length here in that case, and you could now dig deeper, but it's more a confirmation. We had 2000, the year of 2000, the last year was the year with the key cycle. Now with the peak to the upside, this I don't know, but at least from the news, this could be induced by what happens to the Ukraine currently, but at least it shows that the top has been already passed. So we should see a downwards move, which is then in confirmation by a daily model here. So the daily model, which started beginning of April, is now also in alignment with the weekly model, at least until August, September. So that's the takeaway from the gold-silver analysis for the session for this week's Cycle TV. So I hope you like this analysis today. We just visited gold and silver cycles, weekly, daily. I tried a little bit to explain, start a little bit in the past, make yourself comfortable with the daily cycles, get to know which are the key cycles which show up in past data, in different data sets. Switch a little bit on and off the key cycles in your composite to see how valid a cycle projection in regards to the timing points in the future or to the next important timing points. I would never recommend to reach out too much into the future. Just check the next projected timing points. And if it looks like that if it does not matter if you pick 1, 2, or 3, you could trust this, or even it's you have more and more trust in this projection. It does not mean that this will happen now on the markets. The markets are more complex than just cycles, but at least it can give you an idea, a roadmap, what to expect. And on top of that roadmap, you need now to put your experience in trading, risk management, in your individual time frames. And you have this little edge around a possible roadmap, which could help you to fine-tune your entries and exit. So that's it for this session. I will now quickly go through your questions to see if there is at least anything which I can answer today. So Juan, I've seen in Bitcoin cycles beyond 235 tending to end up meaningless. Without going into Bitcoin into this session, Juan, and I think I have talked about the Bitcoin cycles last week, Monday. I would recommend everyone who's interested to review last week's Monday session on Bitcoin. And we have seen that the nominal 200-day cycle has morphed into something. There's a very flat plateau in the cycle spectrum around 270, which is exactly what you're pointing out. So in regards to your observation or your comment, Juan, you're right. Right now, the cycle with length of 270 or whatever it is, there is no clear peak on the spectrum. So right now it's meaningless. It might have been moved into something larger, but that's not confirmed yet. And please review the session I did a week ago on that. Photoshop Prep, you're welcome. I mentioned that. Fabian from Switzerland, can you please show us how to analyze long-term downtrending stop like Credit Suisse? Give me a second. We need to check what it is. At least I need to check if I can pick it up quickly. I'm not finally sure, but let me check. Credit Suisse. It's a long-term. Let's see if there's something in it here. Yeah, that's Credit Suisse. We could do so, Fabian. Let's give it a try. This is the Credit Suisse stock. We can maybe load some more data here. Okay. Yeah, that's it going back into the year of 2014. That's the long-term cycle analysis, taking all 2000 bars or these at least 8 to 9 years of data into account. Yeah, at least that's what you said. Now we have, and that's, at least let me comment on that. This data shows us a more downtrending signal here, with just some flat peaks around or cyclic behavior around that. So it's always hard to analyze cycles which form a kind of long-term trend to detect some cycles. So that's said up front. So the key procedure is, if we look at the spectrum, we have one interesting cycle here, 339 days. We need to take more time to analyze the shorter term peaks here, which I can't do now. But at least for now, let's choose this longer term cycle here, which is still okay, having a quick view from past. Yeah, I'm just trying to connect the changes in trend in regards to connecting these key topics here, connecting this with data. So that looks valid. At least there's a rhythm. So there's a rhythm in this data, and don't take the amplitude into account. But this gives Credit Suisse, yeah, if this was sideways, then there is an upswing ahead from this cycle, at least just from this very quick and dirty short analysis. So we are currently at a topping point until, so maybe not a topping point in absolute price, but this is giving now negative cyclic phase into October. So that's it for Credit Suisse, at least for now. So Fabian, that's the answer quickly. Epis, I think I did the weekly comparison. Yeah, Alan Greenberg, interesting question, or good point you made. So let me read your question. How do we know which cycles are most important? You use Fourier. Larry Williams used solar flares. So there are So there's not only one method of cycle analysis up front. What we are doing here on this Monday analysis is indeed, Alan, we are using digital signal processing based on our data sets. So it's not plain Fourier, it's a pre-processing, post-processing is a special variant of the Fourier analysis, but that's digital signal processing anyhow. For sure, there are other forms of cycle analysis which could be applied. Solar flares are not the flares alone. So these are the eruptions which then bring loaded particles down to Earth, which influence the ionosphere or in our atmosphere, which impacts the magnetic field here on us, and these changes in the ionosphere and in the magnetic field might impact our decision making or our mood. So that's the impact our solar system, or at least solar flares or geomagnetic storms, which come with these solar flares erupted. They don't come in real cycles. So geomagnetic storms are also measured, and there's an KP index, which is like kind of space weather. And based on these space weather particles, we can measure influences here. So this is a complete different model. You can, and if they diverge, so they don't give you a conclusion in the same direction, then we don't have a clear answer. So that's always the case. There's not just one model here. If you have one model, then that's the case. Peter Eliades has different ongoing questions. Yes, Eliades is also using a different way of cycle analysis. He is using the nominal model of Hurst and then is doing price projections based on that. So not time-based projection, price projections. So, but this will at least completely, be too much just for this daily session. So just to summarize, there are different ways on how to do cycle analysis. Digital signal processing, price projections based on offset shifts of nominal cycles, which is the future line of demarcation, which is Peter Eliades using. Solar flares or from the solar cycle is a complete different model. So yes, cycle analysis is a complete complex subject. That's why we are here in the foundation and at least want to provide the knowledge. Alan, I hope at least just for a short comment on your question, there's I think it's a big topic you mentioned. I tried at least to comment on that for this. Matthias, hallo von Thienen. I will check my mails. Andi, bitte mal wieder bei Markus Koch vorbeischauen. Sure, I will be in contact. And I think we will update anyhow on June, July, as we have predicted in the last session. We could see, or what we have now, the upswing which really happened. We need to update this end of June. Yeah, and then let's take the final comments. So Fabian, you're welcome. That's the purpose of the live session. That's why I made the Credit Suisse. And I think in regards to time, I will pick the last questions and then kick next week off also with oil and with the Nasdaq again. So the main global markets. So as an outlook for next session, we will revisit the global markets like S&P 500, Nasdaq. Let's review the weekly and daily cycles. There's no change every week, but we will do this next week. And also then let's have a view on oil prices and maybe some energy sectors like gas, oil for next week. So that's it. Thanks for being here with me today. We have a holiday here in Germany today, so at least it's a different way of working today. But next week, I hope to see you all again. Same time, same place. You're welcome. Thanks for staying with me. Have a nice week. Stay safe, and we will meet next week again. Bye.